All right. Hey there. Good morning, everybody. It's just after 11 a.m. Central Standard Time here on Friday. What is it? The 24th of January, 2025. We've got one more week, guys, and then we're on already to the second month of the year. Can you believe that? So much has happened this month. And what retail continues to show us is that they are impatient. Impatience loses you money, guys. Yeah, you absolutely have to understand this. All right. So before we get going here, do me a favor, hit the thumbs up, hit the like, hit the subscribe, follow me. Do me a favor, repost the link to this. I'd really appreciate that. Because, at the end of the day, if you're following me, then you know that what I do here is to give you guys real, legit information. I don't try to smoke, blow smoke up your rear end. I don't try to get you all hyped up about something, and silly stuff like that, right? We're all about understanding how and why markets move the way they do here, and then finding some good trades and whatnot on there. Now, the first half of today's show says, "Don't forget to turn on my mic." You guys can hear me, right? Don't tell me I've been talking here and you guys can't hear me. And I'm going to get Vince if y'all can hear me and he's just messing with me. So I'll give you guys a minute to let me know that you can hear me. Yep. Revy says, okay, Vince, we're going to have a talk later. Don't forget to turn your mic on. Anyway, excuse me. So yeah. So today, for the first half of the show, I've got a guest, Juan Leon. You guys have seen him on here before. He's one of my favorite people out there in the crypto space, guys. He is the senior investment strategist at Bitwise Invest. So, the Bitwise guys, I'm usually posting stuff from them and, having discussions with them. It's Juan and just everybody over there, guys. Everybody's Matt Hogan's over there. Horsley is over there. Guys, I can't remember his name, right? Park is over there. So everybody, a lot of great guys. Listen, if you are not following these guys, you really need to. These guys pump out so much legitimate information, guys, because being on social media, it's easy to get caught up in all the hype and all the nonsense and all the emotional posts and stuff like that. These guys are giving you legitimate information. So, if you want to actually listen to, information that makes a difference, follow these guys, okay? Follow them on there. And so, without further ado, I'm going to bring up Mr. Juan Leon here, and he can let us know what's going on. Let me kind of put this a little bit better there. What's going on, Juan?
Hey, Chris. Good morning. How you doing today?
Well, I'm doing all right. I thought I had a pretty great view out my window, but man, I like the view outside of yours there.
Thank you. Yeah, I'm here streaming from our San Francisco office at Bitwise.
Oh, okay. All right. So you're not in San Antonio right now.
I am not. Actually, you and I haven't caught up in a little bit, but over December, me and my wife moved to San Francisco, so I'm here full time now.
Wow. Well, hey, congrats on the move, man. I'm not so sure. Congrats on San Francisco, but we'll see. We'll see if things clean up a bit and get a little better out there.
They are getting cleaned up. I think the media, the national media, I think over exaggerates a bit. Not that there isn't issues and some homelessness issues and whatnot, but it's having been here for a month and a half already. It's not as bad as the headlines made it seem.
Oh man, sorry about that. I got this coughing fit all of a sudden this morning. We got this kind of crazy weather, just where you were leaving from. You left just in time, man. You got all the snow and craziness.
Snow and everything, right?
Oh man, it's been stupid. Not as stupid as Louisiana and getting over there even into the Panhandle in Florida. Absolutely crazy. 7 inches on the beach. I mean, what?
Wow.
So yeah. But anyway, hey, listen. For those of you that don't know, this is Juan Leon. He is the senior investment strategist over there at Bitwise. So like I was already pushing here. Follow these guys. You can follow Juan at Singularity7X on Twitter. And he's just a trove of great information, guys, on there. And then, of course, from him, you can follow the other guys, Jeff Park and everybody else that's over there. But, it's not usual that I push somebody up here that you should be following. these guys have been absolutely banger, absolutely, spot on for a few years now. And it's great, man. It's great. So anyway, that said, I know y'all had pushed out some research on Ethereum, and I kind of wanted to touch on that first today because let's face it, everybody is. It seems like if you were to listen to social media, is giving up on Ethereum, right?
Yeah, Ethereum's been in the doghouse over the past year, outshined by all the excitement with Bitcoin and the launch of the Bitcoin ETFs. Now all of the excitement about a strategic Bitcoin reserve. Solana has had a massive year with all the meme coin frenzy and a lot of activity happening there. And all of that overshadowed Ethereum. But really, I think Ethereum is overlooked. I wrote a piece recently called calling Ethereum the comeback kid of 2025. I think there's a lot of great things happening on Ethereum that are a lot of people are not paying attention to. And there's been some controversy, as we've seen recently. There's been controversy in the Ethereum Foundation with the leadership and where things are going. But as you pointed out, really timely this week, they announced an initiative called Etherealize, which is basically a marketing initiative to work with business development to reach out and work directly with Wall Street and traditional finance to push Ethereum, which is already what's been building. This is what I think is the most overlooked about Ethereum is the tokenization of real world assets. Real world physical assets have a combined value globally of $100 trillion. And all of the world's biggest asset managers, first and foremost, BlackRock, are starting to build tokenized funds, bring the real world assets online, on chain, onto blockchains. And they've started with things like treasuries, but they're going to bring private credit, private equity, real estate, everything, commodities, everything you can think of, because of the benefits of bringing things on chain, fractionalizing the ownership, lowering the cost, opening up a 24/7 liquid market, new investor base. And in that world of real world assets, which are getting built on many of the blockchains, but Ethereum has far and away the lead. It has 80% of the market share in that really fast growing market. And that's just one of many things that are going on with Ethereum that I think are being overlooked. So I think this push from Etherealize to market Ethereum to Wall Street, they already announced it in the push. What they're going for, going to focus on is this tokenization aspect. And so I think this is only going to supercharge what is happening on Ethereum already. And so I think it's in due time for people to notice that Ethereum is still here. It's here to stay, and it is the most of the smart contract platforms. It's the most battle tested and secure of all. It's been around for the longest. I mean, not longer than Bitcoin, but Bitcoin is not a smart contract platform. Bitcoin is the value. But of the smart contract platforms, Ethereum is the most secure, the most battle tested, and that's what asset managers who are bringing trillions of dollars on chain want. That's what they're looking for. They're looking for a secure place they can trust. That has a long track record of security and reliability, and that's what Ethereum provides.
Yeah, and me as a a market technician, technical analysis is where I come from. I don't really delve a whole lot into the fundamentals. I can use charts to tell you what may be likely happening with fundamental information coming out, but because again, fundamental information often is lagging, right? We get reports from the government, as far as jobs and all this stuff go, but it's always reporting what's happened, right? And so I tend to look at the charts with this idea that the first place that you can find out how people are feeling in general is where do they put their money, where they take their money out of, and that's the markets. It makes it quick and easy. So for me, I look at this and I look at the structure, and the structure looks great. I look at the sentiment, and the sentiment is again just absolutely in the doghouse. Everybody's like, oh, but Solana's done this much better, and oh, Sui's the next thing here, and they don't, they just kind of ignore what's going on there. And I think a lot of that just happens to be this, because retail can get really loud in social media. Mm-hmm. And retail tends to, let's face it, they hop the new shiniest thing, right? I mean, all we have to look at is Trump coin released there on Friday, and how quick that went up. And then Melania coin came out and Trump coin dropped back. And so absolutely crazy. But I think people fail to recognize just how used Ethereum really still is today. And then, like you said, it's got the time, it's got the time in the seat, basically. It's been out here, for a decade doing its thing, getting better there. And you're going to have these news events where you got issues with leadership and you got issues with this, you got issues with that. But I think overall, at the end of the day, I do expect that Ethereum is going to probably give a hell of a rally that's going to leave a lot of people upset that they didn't listen to people like you or people like me, out there that are saying, listen, you guys are missing the forest for the trees right now. You're so up on that what's the new shiny object right now that you're not seeing the next one, the old big dog kind of setting up ready to go.
Yeah, you're spot on, Chris. And that's unfortunate that, crypto Twitter seems to have the memory of a goldfish. And so it really lose sight of the long-term picture. And it's funny, even though it's the second largest crypto asset, I think at this point, given the performance gap in this bull market, in this cycle, Ethereum is what Warren Buffett would call a classic value bargain at this point. Wow. I think it's a bargain crypto asset of the lot. So I'm excited for what's ahead. And even, I think it's coming together fast and things are going to turn around faster than people think. There was the Etherealize announcement, and then like 2-3 days ago. And then yesterday, Vitalik put out a piece talking about refocusing on the economics of Ethereum and how they accrue value to ETH. So I think there's a concerted effort underway that is going to move things along pretty quickly here. So I expect a turnaround. And for the listeners, I think this is the time to pay attention.
Ooh, look at that! He said it. He said it's time to pay attention, guys. And what else do we get from that? We know that President Trump's, his digital asset company there has bought how much Ethereum did they buy? Something like 50 million or something, or maybe even more than that.
Yeah, it was a big number. It was a big number, above 50 million. Trump is now fully focused on crypto. He has a big financial stake now.
Yeah.
What a week not even the week, the 24 hours we had rescinding of SAB 121. So that to allow the banks to come play in crypto. So opening up custody of the banks. We had the executive order, which puts together all the major agencies to look into and figure out how to work with crypto. It included the CFTC, Treasury Department, the SEC. So all the major agencies that even the Department of Justice, all the major agencies that we wanted to be involved in crypto in a friendly, accommodative way, they're now, directed by the president, who has said that crypto is of strategic and importance for the country and for the leadership of the country. So this is squarely, I think the market is still underpricing how big this sea change is. And they've directed, this direction is within 6 months, they have to go out, survey the regulations and put a plan together for how to craft sensible regulations. So I think within 6 months, we're going to see a regulatory pathway. And while we wait during those 6 months, I think there's going to be, in anticipation of that, a ton of capital coming into the industry. This is not part of our official Bitwise predictions, but I think given what just happened with this executive order, I think this year we're going to see record amount of venture capital investment in the industry. And we saw the announcement for the Stargate AI, and Trump is now squarely putting together AI and crypto as priority technologies for the country. So those synergies are going to build. And I think a lot of that money that is going to go into AI is going to flow into the infrastructure of crypto that allows AI to thrive. So I think, the miners via the data centers are going to benefit. I think the applications, a lot of the AI applications are going to be built on crypto rails. We already are seeing a lot of them do that. The most successful right now, AI agent platforms, virtuals, are built on blockchains. So I think this is just supercharging what is going to happen.
Yeah, and I'm glad you bring all those other points. I mean, again, it's a lot of, again, crypto Twitter being very impatient and very emotional. We're upset that he didn't like drop 20 executive orders about crypto on day one, But I find it really hard not to be bullish on digital assets going over for the next 4 years at least. I mean, when we look at it, Trump said, listen, if I get elected, these are the things I'm going to do. And oh my God, this guy's hand has not stopped signing those executive orders. He released fully pardoned Ross Ulbricht, which, for many of us that have been around for a while in crypto was like, yeah, it's about damn time, because when you're looking at 2 life sentences in 40 years, which is so much more than anybody else is getting for dealing drugs or murdering people or whatever, basically.
Yeah.
Yeah, so we get through that. So what we're seeing that, okay, so Trump, whether you like him or not, that he's at least following through with what he said he would do.
Yeah.
And if you are pro crypto and you've listened to things he said that he wants to do here with this administration coming up for this next 4 years, again, seeing him following through already, and just, many of these presidents, it takes the first 90 days to kind of get all these executive orders that he's already done. And some of these have been huge. I mean, really, really have been, or huge, as he would say, or however he says that. I don't know that I can do it, but so I don't know. I guess my thing here is really hoping that people that are listening in take a deep breath, sit back a minute, kind of relax, stop sitting up on the sound bites that we're hearing, from the other retail traders and whatever, the retail accounts on social media, because they're going to give you exactly what you want, which is a lot of emotion. Not necessarily truth, not necessarily understanding. And that's why I wanted to get you on here today. I know we've been trying for like a month, and our schedules kept conflicting there. But I wanted to bring you up here so you can tell us, a little bit more about Bitwise. So you mentioned Bitwise has these 2025 predictions. So they've been doing good so far. So what are they looking at here as far as 2025 goes?
Yeah. Well, let's talk through a couple of the things. First one, let's start with price. We have a price prediction of Bitcoin ending the year above at 200,000 or above.
Like that.
Now, we think this is definitely possible. This is more possible now than it was when we put the predictions out, given this executive order, how early the executive order is, how the magnitude of what it covers, and how quickly things are moving. You think about the conversation around strategic Bitcoin reserves. That's something that has only existed in the public imagination and the public conversation for 6 months. It was just in July that Senator Loomis put out the bill, strategic reserve, at the Bitcoin conference where Trump was there, and he endorsed it as well. And in 6 months, we've had that bill snowball into now also, I think we're up to 12 states that have introduced legislative bills for that as well. We have countries around the world. And I think, as you said, with how fast Trump is moving, he's not taking 90 days, day one, day two, the first week he's putting out these executive orders. I think it's really instilling a sense of urgency. And I think this domino effect, this arms race of a strategic reserve, I think is only going to gain momentum from here. And it might take the U.S. as an administration, as a federal government, maybe the 6 months or the year to establish it. But maybe the individual states will move ahead of that. Other countries may start wanting to front run it because they see that Trump is moving and he's serious about it. So I think all of that is accretive to the price of Bitcoin, along with now that the banks are being opened up. We saw also, we've been expecting the wirehouses, which haven't approved the Bitcoin ETFs yet. We saw Morgan Stanley this week, Goldman Sachs this week, say that they're now looking at getting involved in crypto now that regulations are changing. So I think the wirehouses are going to open up, and that's why we think there's more. Last year, we saw 35 billion in net inflows come into the Bitcoin ETFs, most successful ETF launch of all time, and we think year two is going to be even bigger, which is how we get to that price of 200,000 or greater this year. So I think that prediction is in line. Ethereum, which is right now just above 3,000, we think it can end the year at 7,000 or above. Nice. And we think Solana can go to 750 or 1,000. So we think there's strong momentum. I mean, there's strong momentum from new builders in the space, new use cases taken off. We saw last year Polymarket take off and become the leading source for gauging the odds of the election, the first source to call it correctly ahead of all the mainstream media. All of these things are being built on blockchains. So we're very excited for all of that. And talking about Bitcoin going to 200,000, already at 100,000, something we hear a lot from professional investors and financial advisors, but that I'm sure is on the minds of retail audience members as well, is, we're already at 100,000. Am I too late to invest in Bitcoin?
Yeah.
And I really think that it's not the case at all. I mean, yes, if you haven't invested yet, you missed the run up to 100,000, which seems like a lot and a lot missed. But for example, we put out our annual survey of financial advisors a couple weeks ago. In that survey of professional financial advisors, there were a couple really interesting factoids that came out that I think show to me that we're still relatively early, and that definitely at 100,000, there's a lot more to go, and you can still participate and expect great returns over a long-term period. The first one was that over half of the advisors surveyed said that they were more likely to invest this year because of the results of the election. And now that Trump is following through on his word, as we were talking about, I think they're going to be even more inclined to invest. The second is that advisors who already have an allocation on behalf of their clients said that 99% of them said that they are going to maintain or increase that allocation this year. So for advisors already invested, they are most definitely looking to up their allocation. And then the other thing that we learned from this year's survey is that only 35% of advisors are able to allocate in client accounts. So there's still 65% that are not able to allocate on behalf of their clients. So it's still overwhelmingly gated. And that means that there's still a lot more capital to come into this space as the regulatory environment clears up and more investors and advisors are able to allocate for their clients. So I think all of that points to there being a lot more upside, and even at 100,000, I think we're still relatively early. We still don't have a clear regulatory framework in the U.S., the biggest financial market in the world.
Yeah, exactly. And I love that you brought the point about, because it is, if you're like, oh man, it's too late. I need to go do this shitcoin to get my 100x or something like that. But I do the Beards and Bitcoin show on Wednesdays with Andrew and Tillman from Arch Public. And something we've been talking about, because we started that back there, I guess, in about June or so of last year. And so the one thing we've been talking about consistently is, yeah, maybe you're not going to get a 100x return on it, but I think the other way that you need to think about Bitcoin is in terms of, purchasing power erosion, right? So as long as more, dollars are printed, the value of the dollar, it lessens, and, you have to protect yourself. It's not enough just to make money. It's like, okay, so what kind of asset can I actually invest in that's going to protect me, against that delusion or the lowering of that value of that dollar. I'm having really a tough time with words today, so you have to forgive me. I need to do a reset. But yeah, so, but I think that's, it's really a great point to bring up, because we just had Fink from BlackRock there talking about, he just did this thing at Davos where he was talking about, hey, listen, it wouldn't surprise me to see $700,000 Bitcoin. So, if you're looking for price appreciation as it is, so there you go. That's 7 times where you're at right now in the leading digital asset class.
In the leading crypto asset. And I think given where things are given where things are with the regulatory outlook, with strategic Bitcoin reserve conversations around the world, with inflows coming into Bitcoin ETFs, I think this is the best risk-adjusted time in history to invest in Bitcoin. Even last year, there was more uncertainty. Even the year before, more and more. Like this year, I think this year, it's so clear that Bitcoin is here to become ubiquitous and the digital store of value of the 21st century. in a way that wasn't as clear even a couple months ago. And we're still talking about, yeah, we have out to 2030 a price target of above $1 million. Many others have as well. As you said, Fink talking about 700,000 over the next couple of years. So as you said, the upside is still incredible. I mean, what asset that has emerging regulatory clarity has a clear path to a 5, 6, 7x return? It's very unclear what other assets have that. So I think it's the best risk-adjusted time to invest in Bitcoin. And yeah, there's the meme coins or the smaller crypto assets that may have more than 7, 10x potential, but they have a lot more regulatory uncertainty. They have a lot more competition in terms of adoption and use case. Bitcoin is clear that it is the store of value of the crypto ecosystem and the digital asset ecosystem. That's clear. No one else is taking its place. So it has the competitive certainty, whereas every other asset, including Ethereum, which has the leading edge on smart contract platforms, have a lot more competition. So I think on a risk-adjusted basis, this is the best time to get into Bitcoin. And for that matter, many other crypto assets as well. But you have to, as you often tell your audience, you have to size your portfolio appropriately, and you have to risk size your portfolio. So your risky bets make them a smaller part of your portfolio, and your better risk-adjusted assets like Bitcoin make them a bigger part of your portfolio within your digital asset sleeve.
Yeah, no, exactly. And that's a great point because, a lot of time retail does come in. I mean, let's face it, 30 years ago, I started and I came in with the idea that, man, I'm going to get rich overnight. I'm looking for these big, huge returns. And I didn't really understand what risk meant, what risk was. And that's a lot of what I talk about. There's a lot of what I teach is, what exactly is risk and how do you quantify that risk? And how do you then look at that in terms of what you're doing and, and what you should be doing? Because a lot of traders are going to come in now and they're going to look at crypto and they go, man, look, earlier last year, the meme coins, right? You had things like Bonk and you had things like Pepe and all these things just, skyrocket. Then you had Trump here, the Trump coin, right? Doing its thing. And so erroneously, a lot of traders come in, they think, oh man, I can get in and I can make that. And they don't realize, well, first of all, you're not, the odds are significantly against you that you're even going to hold it to the point where you get in at the bottom and sell anywhere near the top. But again, it's what is the perception of risk? It is significantly more risky to get into Trump coin, for example, than it is, as you said, for Bitcoin.
Right.
Bitcoin, absolute best risk, adjusted return. I think you're getting in, like you're saying right now, with all that regulatory uncertainty starting to kind of melt away.
Yeah, and especially if you think about your investment in, over a longer term horizon. Yeah, who knows what happens with Bitcoin or Trump coin over the next couple of days or weeks, but over the next year, 2 years, 3 years, we know where Bitcoin is headed. It's headed to mainstream adoption worldwide. Something like the Trump coin, who knows? It's a fad. Who knows? Maybe it could, maybe it couldn't, but there's no real fundamental adoption and use case behind it or intrinsic to it like there is for Bitcoin. Here's another thing that I think coming back to our predictions that I think is going to be worthwhile for your audience to pay attention to. We think this year we think is going to be the year of IPOs for crypto companies. So there's many private companies that have been incubating, have been growing, are at the point ready to IPO. And I think especially with these executive orders, I think the animal spirits are coming back to the markets. I think liquidity and capital are going to be opening up in the capital markets. So I think there's going to be more IPOs in crypto and outside of crypto. I think the capital markets are going to have a heyday this year. And so we think there's going to be great opportunities for investors to get in early on IPOs of crypto companies. Some that we're excited about are companies like Circle, which is the issuer of USDC, the second largest stable coin. As we saw in the executive order, stable coins are now singled out as the preferred vehicle for transaction. shunning CBDCs. So that's out of the picture. Stablecoins are here to stay and are going to become the medium of transaction rail for blockchains. And Circle is right there in the middle of it. So I think companies like that are going to be really, really exciting. And I think another trend that is emerging with the Bitcoin reserves is we're seeing not just governments talk about it, but we're seeing an adoption trend of corporations adopt a Bitcoin treasury strategy. Yeah. They either are converting their entire treasury to Bitcoin, or they're starting to allocate a portion of their treasury to Bitcoin. And we think that every week we're seeing more announcements of companies doing that. I think there's something like over 70 public companies that are doing that now, and we think that will grow into the hundreds or thousands by the end of this year. We actually have put out, we actually have an active filing for an ETF that will index these companies that hold Bitcoin on their treasury. You know, companies like MicroStrategy, companies like MetaPlanet, companies like some of the miners. There's many companies. The cool thing is that they're not just Bitcoin specific, crypto specific companies. They're companies in all sorts of fields that are now embedding Bitcoin into their treasury. So you have diversification from a sector point of view, but you can capitalize on the trend of Bitcoin adoption. You know, we expect, if all goes well, that ETF to come to the market later this in the next couple of months.
Exciting.
First one to do that. So I think you know, let's keep your audience plugged on the developments with us at Bitwise, so they can hear about it first when it comes to market, and they can participate on that trend in a very easy, you know, indexed approach via an ETF.
Yeah, for sure, definitely. And I got a question here from the audience. They want to know: are the companies buying? Do we know if those companies are buying spot Bitcoin, or are they buying the Bitcoin ETFs for their treasury?
They are buying. They can do a combination. Most of them are buying Bitcoin spot. Yeah, just buying straight Bitcoin.
I was gonna say that's what I was thinking, because we've got the FASB rule change that happened in here, which, you know, doesn't do anything for the ETFs, because ETFs are, you know, accounted the way they're accounted, but spot Bitcoin, you know, spot Bitcoin itself is what it meant to direct. So
yeah, that's really good, Chris, that you bring up, because that FASB rule was enacted in 2023, I think, but it just came into effect this year. Yeah. And so the acceleration in that trend of companies holding Bitcoin is in great part because of that FASB rule that now makes it really easy and convenient for them, and allows them to, you know, fair value and all of those accounting things.
Man, it's like, you know, it's like if you needed the perfect storm, you know, if you were getting into crypto and you were like, what would be the perfect storm?
Yeah.
2025 comes up, Trump's in doing all this stuff, you know, they're all that Senator Warren BS, you know, just shutting down on crypto. You've got FASB rule change, you've got repeal of SAB now on that. You know, it's just like, I don't know how you don't, unless you're Peter Schiff, which I still think he's probably got some secret crypto wallets over there that, you know, he just does the other stuff to kind of, you know, just keep pushing his brand. But how do you ignore that in this, you know, in this day and time?
I totally agree with you. I've never been more excited about crypto, and I've been working professionally in it for 4 years, but was trading it beforehand. I mean, the industry has been fighting an uphill regulatory battle its entire life, since inception until this year. This is the first time that you have a pro-crypto U.S. administration. You have over 250 pro-crypto congressmen. This is, yeah, as you said, this is the moment where if people are going to get involved, they should consider getting involved.
For sure. But you know what, you and I both, we know how people are in general. There's going to be a big old swath of people that just don't believe in it. And when it goes up and everything does all this great stuff, and they'll be like, God, I wish I had gotten in. Yeah. You know, but this is markets, man. This is markets every time. Investors, traders, you know, it's not the same people, but it's always the same people, right? It's the same type of person every new time that comes in that acts the same way, which really makes it more, you know, a little bit easier to figure out what markets are doing.
Yeah. And for, you know, for the listeners, is like, you know, when is the right time? You never know when the right time is, because no one knows the future. But as Warren Buffett says, it's about time in the market, not timing the market. And so get an allocation in now. If prices go down over the next month because sentiment turns down, or there's some economic thing that comes up, or some geopolitical thing that breaks down, you can invest some more and dollar cost average down. Or maybe if things are looking up, you're like, well, I invested early, but I have some more money. I'll put some more money in. The idea is get yourself in there. And then, as you have more money to invest into things that are looking promising, but
Yeah.
sit out on the sidelines and miss the whole game.
Yeah, exactly. Don't miss the game, guys. I have somebody asking, what other kind of, do you have any other kind of price predictions, maybe for Link or anything else out there? Do you guys have?
Our official price predictions, which you can find on our predictions paper on our website, are for Bitcoin, Ethereum, and Solana.
Okay.
Official ones, but so I don't have other unofficial ones to share. But I definitely think that another beneficiary of this tokenization that is going to happen on Ethereum is Chainlink. So for the person that asked about Chainlink, I think they're right on. Chainlink, for those that don't know well, is an oracle. So an oracle in crypto is basically the blockchain that pulls in all the real-time data feeds of information into the blockchain for the services that any blockchain may be, or any application may be providing. So for tokenization, they're going to bring in all the real-time pricing of all the assets that are coming on chain, and they get a fee for doing that. So I think Chainlink is definitely going to be a beneficiary. I'm a fan of Chainlink for sure. Yeah. I mean, there's many exciting crypto assets out there. I like Near, for example. Near is a crypto asset that's playing in the AI vertical. They're dedicated to AI use cases. I think that's really exciting, and they're building great things there as well. There's newer blockchains like Sui that are, they were adapting the they brought technology from Libra that came from Facebook, and they have really fast parallel processing. So for fast transactions, they're really gaining momentum and gaining traction. That actually competes more with Solana than it does with Ethereum. Ethereum is fast, but it has more security. And for asset managers bringing trillions of dollars, they want security, not speed.
Yes.
So that's why Ethereum has the lead. I think we'll continue to have the lead. Solana has taken off for trading because it's fast and cheap. It can play in things like gaming that need low latency and fast processing, but they don't need tons of security. I think that's where Sui and some of these other new blockchains can compete more with Solana than they do with Ethereum, for example.
Yeah, and that's a fantastic point. It's something that I try to be pretty religious about mentioning time and time again. Is there is a difference between retail investors and institutional investors. There's not just a difference in the way they look at pricing, because prior to 100,000, I was telling people, listen, you're not really going to see some real interest, with the institutions. So we're getting above 100,000. They've got a lot of money they have to invest, and they're going to put it in. They want to be able to put it in, so they start getting interested, once you hit those six figures a bit. But like you said there, another thing is security, and it's huge. It's huge, right? And so if you're retail, you're just like, oh, well, look, all the meme coins are on Solana and blah, 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 and this and that. And yeah, that's true. But if you're looking at, should I pick Solana or should I pick Ethereum? You're talking about two kind of different things here, because as these, we've got the Ethereum ETFs that are out now. We've got, regulatory clarity coming in here. So as that institutional money continues to pour more and more into Ethereum, that's not the same, generally speaking, the same type of money that's going into Solana. So I think it's good that if you are, retail here and you're looking at things, don't get caught up in just the headline kind of sound bites about, oh, Solana is doing this much great. Look at Solana against the Ethereum chart, stuff like that. Because that tells just one little small part of the story, right? I mean, you're just saying, okay, well, I'm just going to pick this against this, but you're not even really picking straight up competition, right? It's not apples and apples there.
That's such a good point, Chris. I totally agree with you. And that's where, as a retail investor, you have an edge. Funny enough, you have an edge over the institutional crowd, because you have the wirehouses, the Morgan Stanleys, the UBSs, the Wells Fargos that have still haven't approved the Bitcoin or Ethereum ETFs, you know they're not going to go and buy Solana directly and custody it themselves and figure it out themselves. They're going to go through the ETF vehicles. Right now, the only ETF vehicles are Bitcoin and Ethereum. They're not even approved on their platforms yet because they don't have, they take longer time doing due diligence. They're waiting for the regular clarity, which it has now been announced it's coming. So you know that wall of money, you know, these wirehouses control $20 trillion. You know that wall of money is coming to crypto sooner or later, and you can position yourself ahead of that.
Yeah. But again, it goes back to the same thing I started talking about at the beginning of the show, which was impatience, right? You know, the retail is very impatient. You know, we come in and I can laugh about it, joke about it a bit, because I still remember when I first entered the markets, which it wasn't crypto back then. You know, I started in, stocks, and because I started in stocks, I was looking at pink sheets, It was the degenerate way that you trade stocks, just like the shit coins are the degenerate way you trade cryptos. So coming in there, it was always about how quickly can I get as rich as possible.
Yeah.
And, if I had just recognized really what risk is and risk adjusted return, risk adjusted entry, stuff like this, I would have been so much further ahead. It wouldn't have taken me years of just throwing money in the bank like I'm at a strip club. Here's a dollar bill, here's another dollar bill, here's a 20, throwing it in there. Not that I know much about strip clubs, folks. I don't partake. If you do, that's okay for you. Not my thing, but it seemed like a good enough analogy there.
I think it worked just fine. Yeah, I don't know. I'd be curious to hear how you think about your portfolio. But one thing I did for myself a couple of years ago, after spinning my wheels with meme coins, but also with meme stocks, and just trying to chase things, is I decided, look, of my liquid investable portfolio, I'm going to dedicate 90% of it to things that I hold long term, and 90% of my portfolio is Bitcoin, Ethereum, Solana, and maybe a few others that I really don't touch. I maybe rebalance that once a year or twice a year, but I let it just ride. I have my positions and I let it ride on things. Unless something drastic changes, I don't do anything with it. And the other 5 or 10%, that's what I use to try to trade, whether it's meme coins or whether it's short-term trends or short-term fads, and try to capitalize on them. Yeah. And turns out most of the time, that 10% of my portfolio ends up not doing nearly as well as the 90% that is just parked and doing its own thing on autopilot. And I really think for most investors, if you think about it that way, that might be helpful. Might help you lose less money and make more money in the long term, give you less headaches.
Absolutely.
Less distractions.
Yeah, no, absolutely. It's something I talk about a lot. And even, and I understand a lot of people come and they listen to me, and it hasn't clicked yet. And they're still very much chasing and whatnot. And even for them, I tell them, listen, even if you're a trader, even if you think you want to be a 2-minute time frame scalper like Dick Diamond was, right? He actually did really well with that for 40 years. Even if you want to do that, you should have a bag of Bitcoin. I say at least Bitcoin that you just don't touch, that you just contribute to consistently. Because like you said, the odds are that is going to outperform your day trading and whatnot, especially if you're newer. And I think it's where, as human beings, we tend to lie to ourselves a lot. This has been a theme I've been on for about 2 months now, I guess. Because, in order to correct the things that we do wrong, we have to be honest with ourselves. We have to be honest and say, well, I made that decision. That was bad because of this. But as human beings, we tend to be very, very much like, nah, it wasn't my fault. It was somebody else's fault. I don't want to take that, right? And the problem with that when you're trading and when you're investing is that as long as it's always somebody else's fault, as long as it's never your fault, you will always be stuck on it. You'll always be stuck at that area. You can't move forward because if it's somebody else's fault, then there's nothing you can change, right? If it's your fault, then you go, okay, well, what did I do wrong here so that I don't make that same mistake in the future? And you can end up getting much further ahead. And unfortunately, most traders come in and they're stuck with it's hard to accept or blame, myself and government and society say, yes, it's okay, blame somebody else. And so you kind of get stuck in that without realizing it. And then you continue to make the same bad trades over and over and over again. So if you're if you're stuck in that, just get a bag of something, a bag of Bitcoin, maybe some Ethereum in there, maybe some Solana that you just don't touch no matter what. Put it in a totally different wallet somewhere else. Make it so it's difficult. Make it so you have to go through multiple steps to bring that in, because the easier it is for you to bring the money into your account, the more likely you are to do that, right?
Wow. Here we thought thinking you were just a financial coach, but you turned out to be a life coach too, man. We need to get you up on Oprah, man.
Man, honestly, man, I tell people all the time, listen, the things that I teach about how to approach trading, honestly, are the same things that work in every other part of your life. There is no, you have to be this specific way to trade or this specific way to trade crypto. It is the same things that you're doing the same way, the same focus, discipline, consistency, effort, and patience that you have to do to learn any other skill set, or to get better at your relationship, or to get better at your job, or to get better with your business.
Honesty, discipline, consistency. It's the basic things of life, but you're so right. But it's so easy to get them wrong. And especially what you said about, so many of us play or have played this, the victim mentality role, and everything's against me and everyone's against me. And if it was just up to me, but it is up to you, and you can, and as long as you're, as you said, honest with yourself and really disciplined about, identifying what is working, what is not, what you need to change, and then following through on that consistently. That's how you change and grow and improve and get better. You're totally right. You're totally right.
Yeah, exactly. And I know you've got another meeting you got to get to in a few minutes. Before you go, do you have any other insights or anything you want to add here? Bitcoin miners, anything?
Yeah. I think a couple of things to point out. Bitcoin miners have been in the doghouse, as we've seen. There's some that have done well, but as a cohort, they've been in the doghouse. Largely, we saw the Bitcoin halving happen last year. Obviously, that cut their revenues in half. Yeah. Most of them in our Q4, at Bitwise, we put out a quarterly report that is a bunch of charts and metrics to help you digest the ecosystem. I have a chart there on the miners. It shows you their cost of mining a Bitcoin, and you can see that about half of them are mining profitably. The other half are not mining profitably yet. So that's in large part what accounts for their underperformance. I think as Bitcoin continues to rise this year, and most of them go to profitability, I think they'll turn around the performance. Also, I think there's going to be more opportunity for them in the AI vertical. So I think we already saw that early last year with Core Scientific, with Hut 8, with some of them, but I think more of them are going to start playing in that field. So I think the miners, I expect to turn around in the miners. The AI crypto synergies that I was talking about, keep on paying attention to that. There's AI16Z, which is interesting. It's a venture capital run DAO on a blockchain that is run on AI agents. I think that is super interesting to look at. Virtual is the protocol. I think that's the leading platform for AI crypto agents, and it's seeing incredible growth. I think that's something to pay attention to. So I think those are some of the really exciting areas. Deepen is the decentralized physical infrastructure, basically aggregating resources on blockchains for different types of use cases, whether it's providing infrastructure in telecommunications or energy or compute. I think that's an interesting area. I think it's still relatively early, and we still have to determine which of the, some of the projects will have economics that work and some don't. I think that's an emerging area to look at. And what we were talking about, the tokenization of real world assets, I think is going to take off this year, especially now that the banks can custody crypto. Now more asset managers who have been piloting blockchain for a couple of years are now going to come in to actually build and deploy. So I think that's going to ramp up really quickly.
Yeah, I love it, man. I love it. And I'm sure the audience appreciates your thoughts on those specific cryptos there at the end as well. Like I said, I know you've got to jump here because you've got another show to do. God, busy man. You get no idle hands. It's good.
Yeah, well, thank you so much for having me on, Chris. Always enjoy the conversations with you, and I hope to do another one soon.
Yeah, man. Let's make it sooner rather than later. Let's not wait so long next time. All right.
Yeah, thank you.
All right,
Take care.
buddy. Hey, you take care. All right.
Bye-bye.
All right. Hey, there you go, guys. So hopefully, you got a lot out of that. Hopefully, you can understand why I value Juan so much in his opinions and his thoughts, and the whole Bitwise crew over there. They're, again, I'm a strictly a technical trader, but if you're looking at fundamental information, if you're looking at some really good research, they are definitely one of the best places that you can find that. And there's so much of it's free, guys. They post so much of it free. You like Juan? Tell him to grow a beard and join the Wednesday Beards and Bitcoin show. Oh, that's good times. That's good times. Listen, so let's get into some charts here, guys. Y'all feel like that? Y'all feel like looking at some charts? Can I get a yes? Can I get a yes? Can I get a thumbs up? Can I get a woo? I don't know, something. Anybody yodel? Oh, I'm not going to yodel for you. Don't worry about it. I'm not going to do that. Let me see here. So let me see. Let's jump over here first. The first thing I want to talk about real quick is IWM, guys. So those of you that were paying attention last year, you guys with the yellow and the hell yeah and the whoop and the heck yes, I love it. If you were following me last year, though, you'll know I was talking, as we were kind of building this up here, talking about how this was likely going to be reaccumulation here, looking at that price action and volume. And then as we were right about here, I talked about how we would probably get a dip. And if we close that dip back on up there, this is the weekly chart just so you can see it all. But if you look at the daily, you can see it. I said, that would be the time to buy. And it absolutely was the time to buy. So, if you were in at that time and it was something that you did, congratulations. If you held it, congratulations. This is IWM, which as you can see here is the Russell 2000. I often also talk about the RTY, which is the futures for this chart, for this Russell 2000. So the futures market there. But man, oh man, it looks just absolutely great. We had the peak out above the all-time high here. So new all-time high started. We got the pullback. We got this nice bullish engulfing. I'll zoom in a bit here. This nice bullish and almost a bullish engulfing weekly candle here. It gapped down and then rallied up and just missed closing above the previous week's open there. But right there on support, right there, right here, look, low volume node, exactly what you would expect. Right there, just prior to the triangle, putting its support there. So I think you've got upside here. This local wave 3 minimum expected target of 306. This larger 3 minimum expected target around 343.60. So a lot of damn upside with this, guys. I know Tom Lee recently reiterated how much he believes. If you guys don't know from, oh gosh, he's from what? Fundstrat. And so he's one of the most bullish guys out there. But last year, 2024 into 2023, when I was talking about it, he was like the only person that I could find talking about it, about the bullishness. Small caps. And for those of you that don't understand why small caps are so important, it's because it's really, really difficult to have a bad economy and the small caps rally. The small caps are so much more, what's the word? They feel the effects of interest rates and economic issues and whatever much more strongly than large caps. Because they're basically, for the most part, US based, all this kind of stuff, right? Smaller companies. So if they're doing well, forget what everybody else is talking about the economy. If your small caps are doing well, most significantly, your economy is doing well, most likely. And if you think, an economy doing well is, bullish, well, it's hard to be bearish when that happens, okay? Sats is talking about small caps should do well with M&A and IPOs that Juan was mentioning. Yeah, definitely. I just, my picks for IPO, definitely Circle. I like Coinbase. Those are my two big picks for, crypto related IPOs this year. So those will be two I would be interested in on that. So anyway, yeah, again, just kind of showing you the other side of the world in terms of trading, guys. It's, if you want a good economy and that makes you excited for the things that you're investing in and trading, well, watch your small caps. If your small caps are rallying, that's because they're not really feeling a lot of pain from the economy. They're not really, not like you would think they should from the way in which you see, all the news outlets and, retail people on social media talking about there. Okay. Base is huge. If they IPO, I say, yeah, I would be interested in Base if they were to do that. Yeah. Yeah. Right. Base is right there on Coinbase. So yeah, right. Let us know when Circle goes. I'll keep you guys up with that as we do that. But anyway, yeah. So small caps to me continue to look great. By the way, this is the weekly chart, guys. Hidden bullish divergence over, how far is this? August to January. So what is that? September, October, November, December, January. 5 months of hidden bullish divergence. Also, stochastic RSI crossing bullishly and breaking out now on this weekly. So it's hard, again, it's hard to be bearish, at least for the next year. If you want to talk about after, we can talk about after that. But right now, it's hard not to be bullish with all the there really are no real headwinds anymore in crypto, and even stocks are benefiting from that, right? Let's jump on to Bitcoin here. So again, Bitcoin, this is the big picture, guys. We're in a range. We've been in a range for 2 months, about 2 months. I mean, you can really look at it back over here, mid-November. We've been sideways. That's it, guys. That's it. And the problem with that, though, is people tend to get very nervous when that happens, when things don't continue moving up. It goes sideways and you get all the top callers. Listen, guys, the people that are calling the tops, again, the same people that are calling the top over here, the same people that are calling the top over here, and the same people that are calling the top over here, just don't listen to them anymore. Well, listen to them, and when they finally stop calling the tops and they say, oh my God, it's going to go over, that's probably the time where it'll reverse. So, it is what it is. But listen, guys, here's a range. This right here, this blue line is the 50 SMA here. And as you can see, doing its job there, finding support right there at that daily pivot. And so we got, let me kind of zoom in here a bit for you. We got this big candle, big body candle here, closed almost where the high was for the day. We got a little spike of volume over the previous day there. And we came back and retested, rallied up. Look at what we're doing here, guys. Look at what the price action is doing. Pay attention. Look. Where this move up? Where did it move up into? Into the descending resistance, right? You had a dot here, right? Right there. Pulled back to the pivot. Rallied up to the R1 pivot. Pulled back, retested support here. Once here. Rallied up to the top of the range, came back, retested support again. Broke back out above the R1 pivot, finding support right around the R1 pivot. Go again, guys. I mean, so when you pay attention to what price action is doing, rather than like the 5-second chart or something, you zoom out a bit on this larger structure, you pay attention to what price action is doing. How do you say this is bearish? It's nothing but higher highs and higher lows off this 89,000. Guys, 89,200 and some change down here. So far, rallied up there to around 109,000. That's a $20,000 rally, 22.5%. How long did that take? That took 7 days, guys. It took 1 freaking week. 22.5% rally in 1 week on Bitcoin. Stop worrying that there's not enough upside for Bitcoin for you. Okay? Even when you don't take stock of the other side of Bitcoin, which is the protection against dilution of value. And by the way, thank you for the word there, Sats. I could not get it out for the life of me earlier. But yeah, basically you're just seeing the value of the dollar drop as more is printed, right? And more is going to be printed. I mean, it's right here, guys. And here you are rallying 20, 22.5% in 7 days. Stop with the nonsense that Bitcoin doesn't have enough upside for you. Again, worst case scenario, buy a bag of Bitcoin, don't touch it, and then buy whatever little meme stuff or whatever that you want to do along the way. But as somebody who's traded for 30 years, I'm going to tell you guys, especially if you're newer. And what I mean about newer is not that you haven't been in the market for 5 years. There's a lot of new traders that have been in the market for 5 years. If you are not consistently profitable yet, then you're still new. You haven't figured it out. Because it is very possible to be consistently profitable. But it requires the things that most people don't do, which is that whole change in mindset. Okay? It's that whole change in the way that you think about trading, the way that you think about approaching the market, right? So I focus on that a lot in our, over at the Trading Academy on our 3 weekly live streams that I do. I focus a lot, not just about, like we kind of focus on, Wyckoff on Mondays and on price action on Wednesdays and on Elliott Wave on Thursdays. But during those times, I spend a lot of time about, okay, not just this is how it's done, but how should you approach this trade? If this market's looking like this, should you go in here or should you wait for this? And here's the reason why you should or shouldn't. It's about getting you to understand, because it is a shift in what's going on up here that's going to make the biggest difference in your portfolio. And until you get that change, right? Until you can actually get that change, you're going to continue to struggle. And this isn't putting anybody down. This isn't saying this. All this is saying is this is the reality of it. And the sooner you recognize that, the sooner you take it to heart and be realistic about it, the sooner you're going to be able to really start having the success that you want as a trader. But just because very few people in the grand scheme of things make it as traders doesn't mean you can't. They do it not because trading is let's put it this way. As I always say, trading is simple. It's not easy. And it's not easy because of you, because of your mental and psychological things that you're dealing with that you never do end up dealing with. And it's because of that why retail is often out and they lose money as traders. That doesn't mean you can't be successful. It just means you have to stop doing what you've been doing. You have to stop doing what everybody else is doing that's keeping them broke, right? That's keeping them losing money. It's keeping them just putting money in the market and not pulling out money from the market. Does that make sense, guys? All right. There's always these people that come in here and post their nonsense. Sorry, guys, that you have to deal with that nonsense in the comments there. If somebody with a wrench would get rid of them. Oh, we don't have anybody with a wrench on Twitch, unfortunately. Be careful, guys. When people come here and pop links in the, I really don't feel like I should have to tell you this, but I'm gonna say it anyway because I know there's always new people. When people are popping in links there in the comments, and they're like, "Oh, this, go do this, go," be very careful. Most of that stuff, I mean, it's going to be spam stuff. Okay, at the best, it's spam. But often it's a scam. Often you go to the website and they lock into your browser. They inject into your browser and they're able to get into your wallets, your crypto wallets and stuff like that. And just don't put yourself in that position, guys. Okay. I just want you guys to be aware of that because I know a lot of people are new. I forget because I'm a part of this. I've been doing this for so long. I forget sometimes that there are people just coming in. Maybe you guys do too. We're getting people every day that are just coming into crypto, that are maybe just starting to come online a bit, older people even, right? And so these things that we know about, don't go clicking on those links or following up, pasting them into your browser and all that silly stuff. Don't do that because they can drain your wallets and, get your private information, stuff like that. We got to remember that, oh gosh, other people are not so tasked with with knowing that like we do. So anyway, just want to say that there. But look at this, guys. Do you really feel bearish seeing this? Because what do we have? We have a range here. We have the volume. Even if we start from the top here, right? Volume dropping off the range. What happens here at the low here? We've got this amazing doji candle, large lower wick, bullish SFP below the support here, spring, spike of volume compared, the last couple of candles here, last few candles. Man, if you saw that print on that Monday, the 13th of January, you should have been long. There's absolutely no reason with this volume drop like this looking like this that you shouldn't have been long there. And then at least up to the descending resistance, right? And when you pull back and it held here and it bounced back up, you should have been looking to go long again to the top of the range. And so here we are, just kind of continuing to make our way up higher there. So it's really hard from this structure. And by the way, the move here, you see how these candles, the candle bodies, the spreads are getting larger overall. It's not every candle, but generally speaking, getting larger as we're going up. And do you see how the volume is expanding as well? If you want to understand what your trend is, look for overall candle spreads, bodies of candles that are overall, again, it's not going to be every single one is going to get, bigger and bigger and bigger. But in that trend coming in, you should see them generally getting bigger, and you want to see your volume expanding with it. What's the difference here? Look at the difference here, God. You guys pay attention, okay? I'm doing this for free right here. This is huge, okay? Candle spreads, generally expecting to get bigger through here, volume expansion. This is a trend. What's going on right here? Volumes, candle spreads start big and getting smaller as they're continuing down here. Volume is dropping off as well. Completely opposite thing happening here than what was happening here. Even if we look right here, we bounce back up and then we have this decent sized candle here, and then look right into smaller candles. Right here, even into this doji, smallest bodied candle. Volume dropping off as we did that. If you can just recognize this one thing and learn how to do it, it'll actually, increase the success with which you have, just generally speaking, because you're able to identify what is a trend. It's huge, guys. It means a lot more than what you might think at the moment. Let me see here. Thoughts on converting some Bitcoin to ETF and selling January 26th for how many covered calls to stack additional sats. So generally speaking, I can't give, because I don't have an RIA license, I can't give specific advice to people. Let me see here. You said, what are you talking about? I can say generally speaking. Okay, January of 26. Okay, January of you. Yeah, that's what. Are you saying January 26th? Or are you saying January 2026? Oh, I guess that's gonna be 2026. 26th is Sunday. Sorry, I got to get a little clarity here. Let me see here. Converting some of you to ETF. I don't think that's a bad idea in general. If you're not really astute when it comes to options, if you don't have a lot of experience with options, make sure it's a lot smaller than what you may want to do. And I just say that because often with trading, we'll get in here and we'll try and do things that we're not really good at. And of course, options are a whole different bag than just, what I'm showing you with trading, right? And we may think that we've got it down, we've got it figured out, but we don't know how to reduce our exposure on that. We don't know how to, adjust our risk, as that plays out, right? And so you don't want to just be like, oh yeah, I'm just going to sell like 50% of my Bitcoin, and put it in that. I wouldn't do something like that unless you're like, again, really, really comfortable with options. You got a lot of experience with it. I would keep it pretty small, but overall, I don't hate the concept right here. But again, unless you're really, really well-versed in options and a lot of experience with it, I wouldn't do like a whole bunch. Now, here's the thing. Now, let's say he listens to me or they listen to me, right? And it turns out really well for them. Then they'll be kicking themselves and going, oh, I shouldn't have listened to you back then. But this is where that thing I was talking about Juan about, which was that risk, understanding your risk in your portfolio and what you're doing, and how most traders, especially retail traders, don't really understand risk like they need to. And that's where this comes in, right? Because it could do exceptionally well. But the part of the risk that you're not taking, hindsight's always 20/20, but the part of the risk you're not taking into consideration is, and I don't know if you have a lot of experience with it, but I'm just saying, just in general with people that don't, is you're missing the risk involved with taking an option like that with what you have right now and everything that's going on. And again, not understanding how to potentially protect, against that extra risk that you may be taking on when you do that. So I like the concept. I like the idea. But I would probably limit just how much you do with that, to be honest, until you get really comfortable with options and, you understand what you're doing and all those different things you can do to mitigate risk, as that's kind of playing out, getting to that point. Let me see here. Mr. Smith says $22 on my $10 isn't much. It isn't? It's 22%. It's a damn lot. Now, if you're talking about absolute dollars, well, $10 isn't much, right? So I think you're being facetious here, and I hope you are. I hope you're just being silly, but it brings up a big point, guys. A lot of retail gets caught up when they're trading with, oh my God, I have only a small bit. I have $500 or $1,000. That's not enough to make me a millionaire next month, right? And this is what I was talking about earlier about your mindset and how important that is and how it keeps you from becoming successful as a trader. Yeah, you're not going to become a millionaire next month. You shouldn't expect to with $100 or $1,000. Okay, that's life. That's reality. You trying to let that all upset you and then use that as a reasoning why you need to get into really risky stuff is why you're losing money. You are completely 100% the reason why you're losing money. And again, this goes back to what I was talking about, how we lie to ourselves. If you've got a small account, guys, it's going to take you a while to get to some magic huge number that you want to get to. But here's the thing. If you do it correctly and you're using proper risk management, okay, it's going to take you a while at first because it's just a little bit compounding, a little bit compounding, a little bit compounding. But that little bit of compounding time, as time continues to compound and you continue to lock in profitable trades over and over again, your account gets bigger, which means your position sizes get bigger, which means your profit can get bigger. And so as you start increasing in value, you start going much more vertical a lot quicker. You have to absolutely understand that. If you want to sit here and argue with me about that, you don't need to be in the market right now. This is reality. Failure to recognize this and just focus on whatever size your account is, just consistently taking in profits instead of trying to make hundreds and thousands of percent every time, right? You focus on just consistently locking in profits, you're going to get to this point here. It's not going to happen overnight. It's not going to happen next month. It may take maybe 2 years, maybe 3 years. What are you going to be doing in 2 or 3 years anyway? You're going to be doing the same job, the same thing, your life is going to be the same anyway. Or you're going to do what you're doing now and you're going to waste a whole hell of a lot of money along the way trying to turn $100 or $1,000 into $1 million overnight. Or you're going to do this. And in 3 years or whatever it happens to be, you're going to look back and go, holy crap, I actually have options now. Does that make sense? So like I said, I think Mr. Smith was just kind of joking around and being facetious, but it brings on that bigger point that Juan and I were talking about earlier, which is being, realistic and being honest with yourself about what's going on with you and with your decisions you're making. Okay. I've got people in the academy right now that this clicked for them finally, and it made a wealth of difference over months in their account. They stopped chasing, pie in the sky, try to trades every single time. They started focusing on smaller returns and consistently locking them in. Because what does that mean? That means, first of all, you're losing less, so there's less you have to make up. Second of all, every time you make a profit, it makes your capital account bigger, which means following proper risk management, you can have a larger position size the next time, which means larger profits for the same percentage return that you're looking to make. you keep going, that ends up snowballing uphill, not downhill, but snowballing uphill. Because if you think about it, if you're looking to make 2% on a trade, 2% of $1,000, $200. 15 days out of the month, you're making $3,000 a year. That's not bad, right? What I say, 2%? I'm sorry, 2% of $1,000 is not 200, it's 20. It's 20, okay? But here's the thing. 2% of 10,000 is 200. 2% of 100,000 is 2,000. You see? The goal is to get your account built up, not to do it overnight, but just to get it built up. That's your goal. And then you focus on the easier returns. It's not too difficult to make 2% pretty consistently, guys. Doesn't mean you're going to make it every day with every trade. But if you're using proper risk management like I teach it, you won't be losing more. You won't even be losing that much, anywhere near that much, when you're wrong. Okay? Let me see here. So anyway, very important thing here, guys. I know you're here for charts and stuff, but what I just talked to you about right there, and the things I was talking to Juan earlier about as far as mindset and emotion, stuff like that, that's the stuff that's going to make you wealthy as a trader. Not learning how to just read these charts, because you can learn to read these charts all you want, but if you don't take care of that other stuff, you won't follow through with what you need to do when the chart says whatever it says for you, okay? So anyway, looking to go higher here. Easy pattern target. I've talked about this before, based on the height of this pullback here, of that correction. It's right up there around 121,000, 122,000, okay? That's not the top. I don't expect that to be the top. I expect us overall to head higher, but that's just the pattern target based on the height of this pullback right here. Oh, look at the DXY. Love to see it. Well, I only love to see it because I was talking about this. But yeah, again, big picture is it looks like we've got a flat here. I've got it listed as a 1 and 2. It's maybe just be an A and a B. But even as an A and a B, so this B is a flat here, you're looking to get down there, at 93,000, 90,000, maybe somewhere right around there. If that's a 1 and a 2, 5 waves down will get you down into the 70s. Okay. So, again, what I'm looking for here, we got the breakdown. We got the impulsive breakdown and close on the daily. Below that ascending support, that's what we needed. We're finding support around the daily here. Wouldn't be surprised to maybe see a bounce. But we could see a breakdown further toward the S1 pivot before it does at 106, 408. But ultimately, I'm looking for this to continue lower. Our targets now are 105, 420, 103, 373, and then right down here at the swing low at 100.157 right there. Those are our targets on the downside here to get us there. Obviously, if we break out higher here, that'll keep that in place still, but right now it's looking pretty decent so far. Okay. Let me see here. Ethereum. So here's my Ethereum chart. Right now I've got us as a wave 4 pullback, about 50% there. Nice large lower wick. Nice volume on that. Basically, it looks to be a potentially just a spring on this local range here. And then we've got the pullback here, right? So we had the volume on this on what would be the selling climax right there. We had big volume on the spring there, but it was lesser than that, so that's good. But we got a pullback here. Again, you saw a lot of volume come back on this one. On this pullback here, this higher low, a lot of volume, a lot of demand showing up there. And then again on the next one, follow through here. And so that just kind of appears to have cleared the way. Here we are rallying up through it. I'm not hating it at all. I've got a wave circle 5 of one target around 5,065 and a half. Let's zoom out here a little bit. As you can see, that'll give us a new all-time high. Based on the height of this pullback, actually that would be 5 of A maybe. I forgot I changed this. I'm looking at this as potentially ABC, ABC, And then this would be ABC in progress here. But based on the height of this pullback here, we have a target up there around 65.48. I think Juan was talking around 7,000 is what they were looking for. So, yeah, we're kind of right up in that area, right? By the way, you can notice here on the weekly, pullback finding support on that weekly pivot. You love to see it. That's what you want to see. Wick down into this low volume node, right back up. Weekly, we're printing a bullish engulfing candle. Still got a few days left. Volume is nearing the previous week's volume. Looks good so far. 3 waves down. You could draw a wedge here probably. Just look for a breakout of that wedge if you wanted to. Let me zoom in a little bit here and I'll show you that wedge real quick. Something like this. Notice where we're currently resisting and where we've resisted right here, right there at that support area. Looks like a pretty legit wedge here. Strong movement between support and resistance, which is what you want to see in patterns. So yeah, if we're breaking out through there, probably good to go. Or you can wait to break out above 37.42 and a quarter to go on that. But you're looking for an impulsive breakout and close above that descending resistance. You need the close above it as well. Gold continues to look good. Here we are just shy of a new all-time high. On these futures here, the all-time high is 28.01 and 80 cents. We hit 27.94 and 80 cents. Again, based on the height of this triangle pattern, 27.95 is that target. I've got it as 5 of 5, but it may just be 5 of 3 here. I may have to go back and readjust. But nonetheless, that's kind of the next area I'm kind of looking at. We'll probably see a pullback sooner rather than later. As long as it stays above wave E here, the low of wave E, which is 26.72, as long as it stays above that, we're good to go. If it pulls back down through that, after it breaks out above wave 3 there, new all-time high, and then it pulls back below that, then that'll suggest that wave, 5 here is complete. But because it's a triangle, we have to get a breakout above this wave 3 here. We have to get that. And once we do that, dropping back below wave E, we'll say, okay, wave 5 is done. So looking good there. Ethereum, Bitcoin, guys. Look at it. This is the weekly. Would not be surprised to see it come down here around this 2473 area, 0.02473. That is the S1 pivot here on the weekly. So we're coming in sideways between the pivot and the S1. We've got room here in the stochastic RSI to drop down, room on the RSI to drop down. So honestly, wouldn't be surprised to see it. But big picture here, guys. We break out above the weekly pivot here. Weekly candle, impulsive breakout and close above the weekly pivot at right around 0.04287. That should indicate that the low is in, and we're going to head up. We jump out to the monthly here. The monthly has not quite reset and oversold on the RSI, so we're working on getting there right now. So yeah, so that's what we're kind of looking at the moment here. If we look at this, yeah, you got your 1, 2, 3, or A, B, C is what it does appear to be here. But right here, that's what we're looking for, guys. Yeah. So we could see, Ethereum not move as fast. Now, in order for this to go down, Ethereum doesn't have to drop while Bitcoin rises, right? Ethereum just has to rise at a slower pace. That's all it is. So Bitcoin needs to rise faster than Ethereum, right? Kind of pull away. And that's what'll get this going down here. So, like I said, I think that's where we may be headed. We'll see if we get there. But right now we're at this low volume node. So we may just get down in here, maybe at the 70.5 even at 0.02672. That may even be all that we get, just shy of that S1 pivot before we head up. But that's how I'm looking at Ethereum potentially heading higher here, but Ethereum still losing against Bitcoin, with looking for Bitcoin to go higher as well. Does that make sense? That make sense? Yeah. So that's kind of where I'm at with that. I am going to get out of here because it is 12:30. So, hopefully you guys paid a lot of attention to what Juan was saying. There's a lot of great information in there, a lot of great stuff that should, really kind of consider in your trading and your investing when you do that. And, check out the ones that he mentioned there as well, especially at the end of his segment there, at the end of his interview there. Those AI that he was looking at, AI coins, take a look at them. Listen to what he said about them. Take a look and dig a deeper dive, I guess, if you want to, and check what he says, check what it is. And then look at the technical chart, the technical analysis. Okay? All right. I really appreciate you guys showing up as always. You can join us at texaswestcapital.com. We'd love to have you there. Right now, before price goes up, you can still get in at $97 a month. And that'll get you all the group coaching I do. That'll get you FIBO, his threshold theory. That'll get you the TWC Traders Club, where we have our trades and analysis all throughout the day. I mean, God, there's so much. You could live on the platform with as much information coming at you most days. So, even if you're just to do it a month or a couple of months, I'm going to tell you, if you really go in there and you pay attention and you learn, it's going to put you so far ahead of where you are right now, regardless of where you are. We do it right. There's a lot of people out there that are just trying to get you in and take your money, and they don't care whether it works or whether you understand why it's not working for you or whatnot. They give you a hard time if you ask questions, all that stuff, but we're nothing like that. So my goal is to help you become a better trader. So come on in, introduce yourself, say hi to everybody in the chats, and you're going to have all these people all over you talking to you. They're going to love talking with you about markets and charts and concepts. And a lot of time, if you ask a question, they'll be out there to help you before I can even jump to it, because they've been around for a while and they know. So, all right, that's it. You guys have a great great. Oh my gosh, I can't even say it. A great day, a great evening, a great weekend. And we'll be back next Wednesday, Beards and Bitcoin, with Andrew and Tillman from Arch Public. Same time, same channels. And then again, I'll be back with my show next week, Friday. And I believe Fibbo is going to be able to be with me next week. He was supposed to be this week, but couldn't make it. So we're looking to get him next week. All right. All right. I can't believe I didn't get reamed for selling Bitcoin for the ETF. Nah, man, I'm all about making money here, buddy. I'm all about making money here. I do like Bitcoin. I do like to own Bitcoin itself, but there are reasons for some people to buy ETFs that make more sense to them to be in the ETF than they do to be on anything else. So, okay. All right, there we go. You guys have a great weekend. Like I said, trade safe. Be careful out there. Do something nice for somebody. I know Gary says that all the time. Don't ask for anything in return. Don't go telling everybody that you did it, but just do it. I have a thing that I do Bitcoin updates multiple times a day for our members, our students. And at the bottom of it always, I have a bit of a saying on there, that I put there every week, right? Or every time I do the update. And what I say is, I'll get it here so I don't screw it up. But I say every day we have a choice to act positively or negatively. So if you get a chance, do something decent for someone today, which could be as simple as sharing a nice word with them. You might just change their day or even their life. And that's legit. Sometimes, you never know what the next person's going through. And sometimes all it takes is a smile, a kind word, and it really can turn them around. We have a choice in how we act and react to people in this world. And I know online it's cool to be the idiot reply guy who's just a jerk, right? I know that's cool. Or it appears cool anyway. It's stupid is what it is. But you know what? Try to be the other person. You get a choice of how you can be, of how you can act. why wouldn't you choose to act in a way that may actually help somebody else out? I don't get that. All right. All right. Y'all be safe out there. Thank you so much for joining in. Hit the thumbs, hit the like, hit the thumbs up, share the stream. I appreciate it. And I'll see you guys next week. All right. Take care.